my business to the next level? It's simple. It's Shopify.
Every second, every minute, man, I swear that she can get it. Say if you a bad bitch, put your hands up high. Hands up high. Hands up high. Tell them turn the lights down right now. Put me in the mood. I'm talking about dark room, perfume. Go.
I recognize your fragrance. Hold up, you ain't never gotta say shit. And I know your taste is a little bit high maintenance. Everybody else basic. You live life on an everyday basis with poetic justice. Poetic justice. If I told you that a flower bloomed in a dark room, would you trust it? I mean, I write poems in these songs dedicated to you when you're in the mood for empathy. There's blood in my pen. Better yet, with your friends and them. I really wanna know you all. I really wanna show you off. Fuck God, pour up plenty of champagne. Cold nights when you curse this name. You called up your girlfriends and y'all curled in that little bitty range. I heard that she wanna go and party. She wanna go and party. Nigga don't approach her with that Atari. Nigga that ain't good game home is sorry. They say conversation rule a nation. I can tell, but I could never right my wrongs unless I write it down for real. P.S. You can get it, you can get it, you can get it, you can get it. And I know you what you want. Oh, what it does is put it in the song. Alright. You can get it, you can get it, you can get it, you can get it. And I know you what you want. Oh, what it does is put it in the song. Alright.
Mic check, mic check, mic check. Yo. What's good, KB? All good, mate. You? I'm chilling. Trying to catch these GU sales, to be honest. I like gold sales too, to be honest, but I think I'm gonna take GU instead of gold today. Let me know if my music too loud as well, or if you hear it twice, let me know. Let's turn this way off. Oh, you're all good. Bet. Oh wait, I didn't mean to do that. Slightly. All right, we had a bullish structure shift here, creating higher highs and higher lows. Then we had another bearish structure shift. Then we had another structure shift here, going bearish. Then we had another structure shift here, going back bullish. Then we had a structure shift here, going back bearish. And now we have a structure shift here, going back bullish. Now we're looking at it like higher high, higher low, higher high, higher low, higher high. So I really could get a sell here. See how this looks on a 15-minute. 15-minute candlestick here has no bottom wick. Perfect. Perfect. Let's set this goal. I want to set a alert here. Not gonna do a sell stop. I'm just gonna set alert. The farther it pushes up though on this extra drive up, the more bigger stop loss I have to have. Cause my stop loss has to be above the high. Move my mic down. I like GU and GJ sales. I don't think I looked at GJ yet. Let's look at GJ. Okay, I'm gonna delete my whole GJ chart because I don't like how aggressive this is. So let's do my GJ breakdown all over again. Daily time frame, fairly bearish, bullish. We had a structural shift here, going bullish. After the structural shift, we could look at these higher highs and higher lows here, showing this actual bullish momentum. Our next structural shift would be here. So we can label this daily is bullish above this area. Daily buys. Done to the 4-hour time frame. But on the 4-hour time frame, our 4-hour higher low is here. For our buys, we have clean 4-hour structure coming up into the level, higher high, higher low, equal highs. Price looks like it's coming down to take out this low. So if we do break this 4-hour level, we could have some sales. Let's look at the 1-hour time frame. Look on the 1-hour time frame. We had a market structure shift here, going bullish. Looking at the structure inside this bullish push, we have higher highs and higher lows here. Price started to consolidate up here, then we had a reversal. Now we have a new market structure shift sitting up here on these cells. Now we are coming down into this level of support. On the way down, looking at our bear structure, we have lower lows and lower highs here. This is the 1-hour time frame. So our 1-hour time frame is definitely bearish as long as we stay below this 1-hour lower high. Do this 1-hour sell. So look how this, see how this lower high acts as resistance. You see we have resistance here, support here, and resistance here, support here. So I do like this level as a key level. Overall, let's extend this to the right. And above this area we have, not that, above this area we have this area here. For this range, then above this range, we have this area. If you're wondering why I'm drawing this area here, I'm looking at this level of resistance that acted as support as well. So we have break, retest, break, retest, continuation. So I like that, like those reactions off of this area. So if I want to sell, I need this 4-hour to shift in direction first. So the 1-hour already gave me that market structure shift here. Then we have 1-hour structure. In order for me to sell, I need this 4-hour to give me a structure shift as well. But this is still considered counter-trend to the daily. The daily is still bullish. Because the 4-hour and the 1-hour telling me to sell, that's 2 time frames out of my 3 telling me to sell. So more, it's higher probability. It's higher probable to take the sells versus the buys. Now, as far as buyers below this area, now as far as the buyer's perspective, right? The 4-hour and the daily is currently telling me buys until we come below this level. But I don't want to buy while we overall making lower lows and lower highs, as you can see here. And I can't take a break and retest of this area because this break and retest already happened back here with this break and retest. So this area was already retested. I'm not going to take a break and retest that's getting retested twice, especially on the higher time frames. And then I know that if I want to take a buy, I have to take a buy when a 1 hour goes bullish as well, because the 1 hour is technically still bearish. So in order for me to take a buy, I have to wait for the 1 hour to go bullish and take this break and retest. This break and retest is really, really high probable because I'll have the daily bullish, 4 hour bullish, and 1 hour bullish above this area. Then we can look to target these previous highs. Other than that, these sells a little bit less probable to the, like these buys will be like an A plus setup. These sells will be like a B rated setup, just because the daily time frame is technically still bearish, it's still bullish. But this is what I think about GJ. Then we have this low down here. The 4 hour low is where my alert is. So this low, yeah, I like this low. They're very similar to mine. I'll post it in Discord. I'm gonna check it out. Let's look at GU. So looking at GU, first I had my sell stop. First I had my sell stop here, but when I had my sell stop here, that's because price was around this area. So looking at it, we have higher high, higher low, higher high. So this is my sell stop. Now that we play a couple candlesticks, now that we have a breakout structure here, showing us that we are making a new higher high, that makes this my now most recent higher low, because this is the lowest point before price pushed up to take out this high. So this will be my new sell stop, and keep my stop loss just above the high, and then we can look to target the lows as well. Just basically to give me a better entry than selling down here, I could just sell right here. I actually have this sell stop open actually right now. Already, well, I actually gotta do it on my other account. Oh, I forgot I'm supposed to be doing that. Adding my trade. Fuck. I forgot my login credentials. I forgot what server that shit is. I gotta pull it up real quick. Let me make sure that shit don't pop up on stream, man. Alright, there we go. Oh, 1, 2, 5, 420. Here we go. Only thing I don't like about GU sells on the 15-minute body close above the resistance. Yeah, but that is true. This is a body close above the resistance, but selling as it's closing above will be bad. But if we have this will be a fake out. This will be a false breakout, enticing buyers to get in. just for price to take all these buyers out and continue in the overall direction of the higher time frames, which is overall bearish. So I don't really care about this close being above if we take out this low, but I need to take out this low first. Selling now would be crazy because for that reason, it could just close above, create a bottom weight, and flip and go bullish. Yeah, but if this push down is aggressive enough to break a previous higher low, that's an overall shift in structure after a bullish fake out. That's an added confluence to me because I look at it like we had consolidation, a fake out, enticing buyers in. Now prices grabbing the liquidity sitting below these lows or looking to target these lows down here. So that 15-minute closure above is actually, I actually like that for the sell side because this is people buying in this area that could potentially get faked out. So fake out for trend continuation in overall direction because this buy is technically counter trend. As you can see, we are making clear. We were making higher highs and higher lows here. Now making clear lower lows and lower highs potential on the higher time frames. This is the 1 hour. Let's look at the 4 hour. Yeah, so looking at the 4 hour time frame, it's the same. 4 hour, we have clear lower lows and lower highs here. This is the most recent lower high. Actually, this is not the most recent lower high. It's actually up here. So technically we're still bearish below this 4 hour level. And this should be a nice fib rejection. Yes, rejecting off of this 618 on the fib level. And we could target these lows down here now. It's just taking a long time to actually play out on after this fib level. But it is respecting this fib overall. It's also respecting this potential lower high. Let me check the Discord, see if your chart is in there. Day chart. Yeah. I like that 4 hour level you got there. That's the same one I looked at. Same thing with gold. Like gold, this will be a break and retest. Looking on the 1 hour time frame. We have this 1 hour fib. We have this lower low, lower high. I want to say lower low, lower high, lower low, but I mean, it's not enough. It's only one candle for a pullback, not necessarily a full retracement. You know what I'm saying? This is like 2 aggressive blue candles or green bullish candles, right? But you see it slowed down and then had a retracement. This is no slowdown in the retracement. This is just a straight one bullish candle. I wouldn't really consider that the retracement. So I will consider this to be lower low, lower high, lower low, potential lower high to continue down. But this lower high failed, and we having a deeper retracement. This deeper retracement is rejecting off, could potentially reject off of this 618 area on this fib level, giving the same idea with GU, a fake out to get the buyers in for price to overall continue with the overall direction being bearish and taking out all the people that's buying too early, or it could just continue up and get these buyers a win, and then have a structural shift on this time frame to continue bullish. Let's delete that. That was my yesterday analysis. Don't need the field level no more. Let's readjust this hourly level to lower low, lower high, lower low, lower high, lower low. Let's readjust this hourly level to this area. Simply just adjust this. Don't need this in my chart no more. We're not trading off of this level. Don't need these anymore either. Just from yesterday's analysis. Let's look at the 4 hour time frame. Look on the 4 hour time frame. We still never took out this low down here. We had a deep retracement, but still never took out this low. So technically, this is still my most recent lower high in the 4 hour time frame. So daily sales, 4 hour sales, 1 hour sales. Now we just need confirmations to continue down with the break and retest. And no confirmations just yet. But sorry if I'm talking too fast though, bro. I'm low-key tired as fuck, but I wanted to go live for y'all. I low-key just wanted to take place my sell stop and go to sleep and wake up at stop loss or TP, to be honest. But I figured I'd at least come on here for an hour or so. Been a few days and feel like How long do you spend on the charts? No designated time. Just whenever I feel like getting off, I get off. No really designated time. No really not gonna say that. No really designated duration. There's a designated time. Pre-London and London Open. Sometimes pre-London, sometimes London Open. So one of those two. Other than that, I just get off whenever I feel like I'm not taking a setup, or nothing is look clean enough to actually take. Then I just don't. But even if I do take a setup, I don't sit through the chart the whole time I'm in the setup. Like, I set my trades, set myself on TP. Then whatever happens in between, happens in between. It's just a part of the price action. Not in this trade yet. The trade that's on screen, not in this trade yet. I have a sell stop sensor. Let's actually put that on the chart. Actually got to do that gold breakdown from yesterday. That gold trade from yesterday, I need to do that breakdown. So I have to edit that video today. So I'm gonna do that after stream, to be honest. That way I can get that on Instagram, my Instagram reels and YouTube shorts. And because if I don't do it today, bro, I'm probably gonna procrastinate and never end up doing it, to be honest. I like how we pushing down right here. Let's look at the 5-minute time frame. Did the 5-minute give us an entry? No, not quite. We had a shift in direction here, going bullish on the 5-minute time frame. Looking at the bullish structure, we have higher high, no higher low. So technically this is still the higher low on the 5-minute time frame, which is also the higher low on the 15-minute time frame as well. So no added confirmation to enter earlier than here. And we had a 5-minute higher low sitting here, like price created this high, then created a 5-minute higher low, then rebroke these highs. Then let's come back down and take out this low. Then I'll look to execute here, getting a better entry, stop loss still above the highs. But because the 5-minute didn't actually give me a confirmed higher low, no trade on the 5-minute time frame, and I have to stick to the 15-minute. Been trying to apply your recent video as my strategy. Are you on my Discord? Join my Discord and send me your chart analysis, and I can review. I'm gonna get a Discord link right now. Invite people. Edit link. Limit. There's a link. Copy. Paste. So if you if you screenshot your chart on Discord and send it in the trading ideas tab, so like send your chart, then I'll go over your chart and give you feedback on what I think about your levels, your zones, whether it's bullish or bearish, etc., etc., etc. I've been using on backtesting. How's it been treating you? I personally don't backtest. The reason why I don't backtest is, or I don't like backtesting, is because backtesting gives you false hope when it comes to actually trading live markets. You don't get to experience the emotion and the actual watching the P&L go up and down with the backtesting. I learned probably like 2 years ago that backtesting just wasn't for me. Now, backtesting ain't for everybody. I could trade the live markets and go on nice win streaks, right? Be profitable month on month. But when it comes to backtesting, I get clapped, bro. Okay, I get clapped backtesting. Like 2 years ago, I did a backtesting session, and I literally lost like fucking 15 trades in a row backtesting, bro. After that, never backtest since. I can't backtest, bro. That kills my psychology going into the trading week. Especially if I'm backtesting and I'm trying to work on a strategy, then I'm backtesting. My backtest, I'm trading is losing. When the live markets come, I'm like, bro, what do I fucking trade? I don't want to trade a strategy. I was just backtesting because that shit clearly didn't work during the backtesting session. So what do I fucking trade? Right? That's why I just avoid backtesting. But if it works for you, then keep at it. For me. So far, 2 to 5, but I also just started trading, but looking for a strat that I can apply and understand. So, by far, as humble as I could say, like no ego involved at all when I say this, I literally have the easiest, simplest strategy. Literally. You got people that trade supply and demand, or that need liquidity graphs before they start to look for trades, or market manipulation or accumulation, manipulation, distribution, all that other kind of stuff, fair value gaps, supply and demand, all that other shit. Man, if it worked for them, for you or them other traders, fine, so be it. Do what you do, feel me? But that shit too complicated for me, bro. Fuck all that shit. Like, no cap. I understand it, but it's too much to look for. I just look for the same thing on every single time frame. That way I keep it simple as possible. All I need to just see is this on every single time frame. That's it. Then I skip down to the lower time frames. Wait till I see this. That lets me know it's a good time to get back in. Wait for this to happen. Then take about, literally, I can't make my strategy no simpler. I just combine that with overall looking at support and resistance. Do you live every day? I used to, not anymore, but I'm trying to get back into it. I used to trade smart money concepts, but there was too much on my charts, and too many reasons to not enter a trade. Yeah, because you see, supply and demand areas going both ways. That's what I think. You see, you might see a demand at the top, then you also see a supply at the bottom. Then you're thinking, well, do I buy this demand, or do I sell at this supply? Like, too contradicting to me. That's why, in my most recent video, I think it's my most recent video, but I did like a long 30-minute video when it comes to building a strategy. But I think every strategy needs these 4 things. I'm gonna do a recap of the video. If you wanna watch the full video, you can go watch it yourself. But a recap of the video is every strategy, no matter what you trade, needs 4 different things. For one, you need to establish a clear direction. Whether you want to be buying or selling overall when it comes to that day, right? Once you establish that clear direction, you don't have to worry about looking for sales if you know you want to buy, because you already told yourself, I'm strictly looking for buys. And you same vice versa. If you're looking for sales, you should be looking for any buying opportunities, because you already know in your head that you have a clear direction of overall looking for sales. That eliminates the not knowing what to do when it comes to buying or selling, right? That you killed that argument in your mind already just by choosing a clear direction that's going overall with the direction of the market. After you establish a one clear direction, you have to look for potential areas where you can execute on that clear direction. So potential areas where you could actually take that buy or sell, depending on whatever bias you had, which was buys or sells. But wait for price to get to that area where you can look to potentially execute. I call that areas of execution, right? Then you just wait for price to get there. No matter what it does in between, you can't do nothing, because you know I don't want to execute until price gets to this area. Like for instance, let's put this in bar replay mode. Say price is down here. If I have this is my area of execution, anything price does in between this area, I don't care about, because I know in order for me to take a trade, price has to come here first. That you don't see me trying to buy it up to get to here, then sell it back down, because I know overall I want to look for sales. So I don't need to catch the buys to catch the sales. That's too much work, right? Too much start time, too much everything. I just simply wait for price to get there. Right? Boom. Now price is in my area of execution. That doesn't mean actually execute. That don't mean actually just take a sell because price is at your area or your potential area to actually look to take that sell. You need an entry criteria that fits in to your trading strategy at that area of execution. So for me, I need price to tap into my area of execution with structure. So as you can see, it tapped into here, but we don't have no structure. Structure is simply higher highs and higher lows. This is what I call structure. Now, if you just aggressively push straight up like this, there is no structure. There is no higher lows. So in order for me to sell here, I need to see structure. If there's no structure, there's no trade. I have to wait for that structure to form. As you can see here, price just did what it did. This is me waiting for structure, waiting for structure, waiting for structure. But we have a high here. We don't have a higher low yet, just for the simple fact that this high never got rebroke. Right? So in order to have structure, we need to re-break the high. Okay, boom. We have this high. This high is higher than this high. You have a new higher high. That confirms this to be a higher low. Now we have structure. Then we have price push up to my area of execution. Gave me some structure from this higher high, higher low, higher high. Now I look to take a trade. Where do I look to take a trade at? At the break of this higher low to price to continue down to go back to retest the lows. Right? If price doesn't come down to break this higher low to actually get me into a trade, and price instead makes a new higher high, then I simply just trail my trade up to the most recent higher low. So this is my higher low, this is a higher high. If price re-breaks this area, giving me a break of structure, then I would just find a new higher low and trade off of that one. As you can see, price end up pushing up, giving me a new higher high. So I see break of structure here. And I simply trail my trade from here to trail my trade to here. Literally. But every trading strategy needs to have: one, establish a clear direction; two, have a potential area to execute; three, entry criteria or entry checklist that you need to have before you actually execute. Then once you have all three of those boxes marked off, then you can look to execute your trade. Then after you execute your trade, you need to know how you're going to manage your trade and drawdown, how you're going to manage your trade and risk, where you're going to look to close your trade, where you're going to look to go break even, where you're going to look to take partials, where you're going to look to close full, all that kind of stuff. That is all a part of the trading plan or the trading strategy. A strategy just not buying or selling at any given moment or at a supply or at a demand or at a fair value gap or at a liquidity gap. Like the whole strategy, part of the strategy is the risk management is part of the strategy. The clear direction is part of the strategy. The entry criteria is part of the strategy. All of that is a part of the strategy. So you might see a lot of YouTube videos that tell you go on this time frame, do this, go on this time frame, do this, and once price get here, do this. But they're not telling you how to manage risk. They're not telling you when is a good time to stay away from these setup. They're not telling you all the other stuff that is part of that actual strategy. That's why when you get strategies off of YouTube that don't cover that other stuff and you try to execute it and you end up losing on it, it's because they didn't tell you the back end stuff that's a part of strategy that is actually needed for that strategy to be profitable. That's just my personal take. Sorry for that little rant I just did. I just low-key did a rant. So how I form my strategy? So when I've been trading for 4 years, almost 5 years. Coming up on 5 years. So how I came about trading, I traded regular, just support and resistance, taking breakouts, but not too much system behind it. I just knew how to identify support and resistance, and I was just taking buys and sells off of those levels. Just if I see that resistance, I was selling. If I see that support, I was buying. Very, very, very simple. Then I came across the waiting for breakout trades. After you find your support and resistance, I started to do that. After that, I wasn't having no results. I wasn't having the best of results when it comes to that. I tried to trade supply and demand. They had the best results when it comes to supply and demand. I also tried trading RSI divergence, and EMA crossovers. Didn't have the best results when it comes to that stuff. Then I developed the range breakout trade, where we have a top and the bottom of a range. Wait for 30-minute candle close. Wait for a pullback to retest the area to break the previous candlestick wick to continue to the next level of resistance. I tried that. That strategy. It wasn't not profitable. Like, I was making money on that strategy, right? But I feel like it was something I was missing. Like, I could make the strategy better, right? So in order to make the strategy better, I kept the same idea when it comes to taking breakouts, buying above or below a key level, but I just added the retest aspect of it. Now, I traded break and retest when I first started, but my retest, I didn't have no structure. I didn't have no criteria for entry. Once I see price break and retest, I would have just took a sell here. Just because I see tapped into it and we have a bearish candle, I would have just took a sell here back in the day. But now, as time went on, I tried a bunch of different strategies, and I just started to get back to the roots. One day, literally just happened. One day, I was just looking at the charts. I was thinking about everything I learned in my years of trading, and I just when I first learned trading, I understood higher highs and higher lows. And the first thing they told me was, if you see a structure shift or a break of a previous higher low, you just look for sales. If you see a break of previous higher highs, lower highs, you just look for buys. So one day I was just testing stuff out not back testing, but on the live charts, because I'm more of a live kind of dude. Like, I'd rather physically lose money testing something than to fake trade testing something. So I tested out on the one time frame at first, but then I noticed that the one time frame, I was holding long ass positions, like damn near swing trading, just because I was waiting so long to actually take a setup and wait for that structural shift. Then I tried it on a lower time frame. Then I noticed on the lower time frame that I was getting faked out too much, because they're a shift in direction too many times, all in the lower time frames. So I started to combine all of them, the high time frames and low time frames. And then I decided to just pick overall bias, go in one direction and just stick to that direction and just wait for all the time frames to tell me to go that direction. Then I started testing that out, and then it's been my bread and butter ever since. But that's how I came up with my strategy. Like, I tried a bunch of other different stuff. Then eventually I just decided everything else was too complicated or had too many potentials or scenarios that could play out or could happen, whatever. There was too many different options. So to keep it simple and minimize complications, I just strictly look for structure shifts on the most recent higher low or lower high on every single time frame, and just have a directional bias overall. Then I just combine that with potential areas that already got rejected. So I want to say I learned from a lot of people, but I learned overall from a lot of people. But my strategy itself, I completely just made up on this at random and stuck with it ever since. And my last strategy that I was trading was profitable as well, but I think this is way better. the thing on my last strategy is my win rate was a lot lower. My last strategy I had like a 50, low 50s, mid 50s when it comes to my win rate. Just catching on the ones. And this strategy I hold bigger trades, longer trades, better risk to reward, and I avoid a lot more losses. My win percentage increased just trading simply this. So I didn't change my last strategy because I wasn't making money. My last strategy was profitable as well. Just that I wanted to grow as a trader, and I developed this strategy, which I think is better than my last one. Do you playing? Like, do you want to execute me or not? Gotta go. These are rejecting this area. UJ. But literally every trade I planned from yesterday's live worked to a T. Yesterday live, I actually caught these good sales, which is very, very, very nice. I had this markup back here for these cells. This played out very, very, very nice as well. I had these GJ cells up here. These played out very, very, very nice as well. I had this UJ trade, as you can see. This played out very nice. Literally every trade I put on the chart played out. I had these cells here on AU. Price never actually came down here though. But knowing that all other ones played out nice, it's definitely tough. That's what's up, fam. I'm glad you out here getting this money, trying to get like you and be profitable. Man, the key to profitability, in my opinion, is number one, a profitable strategy. Once you have a proven strategy, or once you prove to yourself that the strategy you're trading is profitable, you got that part out the way. But that's the first step when it comes to being profitable. You need a profitable strategy. It's a self-explanatory story. If you don't have a profitable strategy, you're not going to be making money. After you have a profitable strategy, you need discipline. You need discipline to actually trade that profitable strategy during certain times of the day, during your session, and only when that setup presents itself, and not trying to force setups because you feel like being in the trade. Right? Once you master discipline, after that it's risk management. Just knowing when to trade, when not to trade, and how you manage your risk. Knowing when to scale up and when to scale down, and knowing when to close trades, and knowing when to sit on your hands and like this is not the best time to trade. Those are the only three things you need to be a profitable trader. I swear. Everything else that you see people say or hear people saying, I'm not going to say it don't work or is a myth, but it's overcomplicated. You literally only need those three things because everything else comes naturally. Your psychology comes naturally. Your discipline comes naturally. Not the discipline. Your psychology comes in naturally. The consistencies come naturally because if you have a profitable strategy that you're being disciplined to, you're naturally going to start to win more trades, building that consistency. It just happens second nature. Your psychology becomes the psychology develops naturally as well, for the simple fact that, again, you have a profitable strategy. Seeing it win over time is building your confidence, so you overall get more confident. So anything else when it comes to trading, overall develops second nature just to mastering a strategy, discipline, and risk management. Juju wants to come down 30 minutes, has no bottom wick. Nah, yeah, I definitely see it coming down. But yeah, 30 minutes just opened 5 minutes ago, creating a top wick first to eventually flip. And we have a previous 30-minute bearish engulfing, which is very, very, very nice. Looking at this 1 hour time frame, this 1 hour candle, we're about to take out the previous 1 hour lows. So everything is definitely pointing in the direction for it to come down. I just wanted to get me in first until I can go to sleep, to be honest. Like, cause I don't want it to push up, break a new high, and then I don't go for this entry. So I like to go to sleep after it already execute me. So if it execute me, then I'll be comfortable just getting off and going to sleep while the trade is sitting at my entry, and I know my stop loss is secure and my TP is secure. The GJ sales were clean. I was asleep though. I'm from the UK. Nah, GJ sales was clean. All of the trades was clean. I don't take too many different trades. Just need to learn how to find support and resistance live on the charts and discipline to get up and do it and learn how to know FOMO. What time zone are you in? Eastern Standard Time, bro. reply to. So when it comes to FOMO, bro, the only reason why you have FOMO is because one, you either lack the confidence or you need the money too bad. Literally. When I say you lack the confidence, because only way you develop FOMO is when you already had the idea that price was going to go higher. You already had the trade idea in your head. You didn't execute on it. So when you actually start to see it going, that's when that FOMO starts to develop. FOMO is driven. I think FOMO is driven off of having potential setups in your head, knowing that this could possibly play out, not taking it, and then seeing it play out. That's what's building up that FOMO. To counteract that aspect of FOMO, all you got to do is when you see a trade that you're confident in, that is within the strategy that you deemed is profitable, take it every single time. No matter the results, win, lose, or break even, take it every single time. And then you will avoid FOMO. Every single time within session, like within the overall plan, but take it every single time. Win, lose, or break even, you benefit from. If you win on it, you build the confidence that you overall the strategy worked and you made money. If you go break even on it, you win from that because you get a pat on the back for managing risk. If you lose in a trade, you also get a pat on the back because you stuck to the plan. So no matter what, it's win-win-win. Win-win-win when it comes to the long game of trading. Like everything is not about right now. Trading is definitely be in it for the long game. On the long game, if you just execute on the strategy that you deemed already profitable, don't get attached to the results. Just simple. Take the trade every time you see it within your session, within the plan, and there's a win-win-win all across the board. You can't lose. You can lose on a chart, but mentally or from the learning aspect of taking that step to profitability, you can't lose. You win with risk management because you know you just did a good job managing your risk by going break even. You win the overall trade, you know you won because you just simply made money. Or if you lose a trade, you got a win or pat yourself on the back because you know deep down inside that you stuck to the plan and you did what was necessary to order to execute that trade, but you just took a losing trade. The trade just didn't play out, right? But all across the board, it's a win. So now it looks like we're having probably like a 1 minute retracement. So if price pushes up from here, breaks this high, then I would just simply show myself stop from here to here and wait for this to get triggered. If it happens again and it just keep going higher, guess what? My sell stop never get triggered and I don't take a trade on GU. Now, if these higher lows start to get higher, and now my quote unquote most recent higher low is now all the way up here, I'm not setting my sell stop above the resistance because this will be selling into a support. I don't want to sell into a support. Only way I'm taking the sell if I'm selling below the resistance. So if price just keeps trickling up, creating higher highs and higher lows, and then eventually my most recent quote unquote higher low is above this level, then I'm no longer interested in sales. But until then, I'm definitely still interested in sales. Hopefully that made sense. Oh, to support resistance. The way I draw support and resistance, first of all, let's get into it up here first. Because, okay, let's get into the definition of support and resistance. Let's pull up a blank chart, actually. I'm going to break this down. I'm about to make a YouTube short on this as well. Let's pull up a blank chart. Now, if support and resistance meaning areas that price could potentially reverse or areas that price failed to break through. So with that logic, this is technically a support, resistance. Technically, this is the resistance because this was the turning point in price. Technically, this was a resistance because this was the turning point in price. Technically, this was a support because this was a turning point in price. Technically, this was a support, right? That drag all the way over here. Technically, this was a resistance. Technically, this was a resistance. Technically, this is a resistance. because these are all turning points in price or areas that price struggled to break through. Technically, this is a resistance. Support. Technically, this is our support. Technically, this is a support. Technically, this is a resistance. Technically, this is a support. Now, looking at this, how does this look? Like fucking shit. This looks so bad. You might be asking yourself, well, you see all these different levels of support and resistance, because technically speaking, these are all turning points of price. Price came down here, found a support, went bullish. Price came down here, pushed down, gave us a retest, found a level of resistance, and then dropped. Price came down here, found a level of support, pushed up. Price came up here, found a level of resistance, gave a little retracement, and it continued higher. Price came down here, found a level of resistance, pushed down. Price came down here, found a level of support, pushed up. So like this literally happens all over the chart. So, right? So drawing support and resistance is not the hard part, but knowing what support and resistance levels to actually look at is the hard part, because technically all of these are literally different levels of support and resistance. But you got to ask yourself, which ones do you want to trade off of? So having all of these marked up, I wouldn't be looking to trade off none of these. For the simple fact that these are all in the middle of the range. Well, I would look to trade off some of these, but overall, these just look too cluttered and all over the place. It looks really, really random and scattered out. So you want to narrow down the limitation. So if I see this resistance is close to this resistance, and resistance meaning areas that the price could potentially reverse. So if this is the level of resistance and price comes up here, I know price could fall from here. If this is a level of resistance and price come up here, I know price could potentially fall here. So with this aspect, this is literally this right here. If I know price could come up to this area and fall, or come up to this area and fall, why don't I just ignore this one and focus on the higher one? Just because it captures more of the range. Because I don't want to buy above this resistance just for it to come to this resistance and then reverse. Same thing here. I would want to buy off of this resistance, or breaking out of this resistance, like this candlestick here, price close above, buying off of it, and then taking a loss here just because it came into this level. And so this level is the same as this level if I just drag it over. All right. So knowing that this is the level, why would I want to buy across here knowing that this is a potential rejection area just for price to sell? That doesn't make no sense. So to avoid taking this buy, just don't have this as marked up on the screen. This level was the same as this level. See, if I just drag it over, these levels align. To avoid taking a loss here, potential loss here, just don't put it on the chart. This is just this level is in the middle of nowhere. Don't put it on the chart. If you look at this support here, drag it all the way to the left. That actually lines up with this one that I drew over here. So you don't need this one. Delete it. Now look at the range you could have to trade down. Now look how much bigger this range looks now. Now you have a lot bigger range to trade in when it comes to buying this above this level. Same thing here. This level over here is the same as this level. Just delete this one. Drag it over. Same level. Now look in here. Drag this over. Not quite the same level, but I would consider this a mid-level, like a minor level. Now this one right here. Why would I want to sell below this support just for price to come into this area and reject? Doesn't make sense to me. So instead, delete the higher one, keep the lower one. Drag to the left. Now look how much bigger you have a range to trade in. Same thing here. So support and resistance is literally just areas where price could potentially reject from. Now, based off of all the levels I drew up earlier, this looks a lot more cleaner, right? This should look a lot more cleaner. But what I like to do, now this is overall in a nutshell of support and resistance. But now what I like to do is I like to combine support and resistance with lower low and lower high structure. So before I even draw my support and resistance, I want to mark off all my lower lows and lower highs. So in this case, well, in a bearish market. So in this case, this is bearish. So let's use my circle tool actually. Where is it at? Circle, here we go. So this is a low. This is a low. This is a lower high. This is a potential lower high. This is a potential low. Now that I have all these marked off, I just look at which ones got respected already as support and resistance. So I put a horizontal line here. Okay, look, we have resistance here at this level. We have support here at this level. Now that I know this same, we got two reactions off of the same level as support, resistance here and support here. I will mark off this whole level. The reason why I will mark off this whole, and how I will mark off this whole level will be, I will capture the whole wick. Because when I teach people trading my one-on-ones, I always say, in the beginning of trading, when it comes to overall understand what a Japanese candlestick is and what an open of a candlestick is, what a close of a candlestick is, what a body is and what a wick is, and all the other aspects of overall candlesticks, I always teach just one thing. Closures are confirmations, wicks are rejections. So if a wick is considered a rejection, the whole entire wick is the rejection, not just the top of the wick. The whole entire wick is the whole area that's being rejected. So with that logic, let's look at this candlestick here. Let's look at this candlestick here. The bottom of this wick is not the rejection. The rejection is everything with inside the wick. This is the whole rejection area, because price didn't close inside this area. I mean, this whole wick is the actual rejection. So with that logic, if this is my potential level of resistance here with the top of this wick, I look left and I guess what? We see more wicks in this area. So to draw my level, I will start at the body of this candle that showed that rejection and go to the top of the wick. Then I'll drag it left. Now look, see how clean this looks now? Now you have clear closures above, meaning clear rejections here. You have a clear rejection here. I know I see a lot of people just put a line on a chart and then just do a random ass box over like this and say that's my support. I like to have a systematic approach to everything. There's no system behind this. This is more just a random level of support that could get broken anytime visually because you just drew the box wrong. Or there's a steeper wick up here that is actually the rejection and not just this little zone. All right, so I like to capture the whole entire wick on each rejection. So I have, hypothetically speaking, say like I had this level down here, how I said this was a low, same thing. I put a line at this low and see, have this price been rejected to the left hand side. Let's look left, see if price came back in this area and rejected. So no, right, we had a gap here that invalidated structure. Then we had too many different closures above and below. Closure below here, closure above here, closure below here, closure above here, closure below here. Meaning this is not a area that is getting rejected nicely, right? This area got disrespected too many times. So this is not, because I know this area got disrespected, this is not an area I will want to trade off, because the odds of this area getting respected again is low, because you've seen it or got disrespected here. So guess what happens when price came back into this area, right? We closed below, price came back above it, showed a fake rejection, disrespected. Came close to it, around this area again, came to it, disrespected. Came above it, disrespected. Came below it, came above it, disrespected. Came below, disrespected. The reason why this area is getting disrespected so much is for the simple fact that you know it got disrespected over here. You always look left to get right. So I wouldn't use this as a level to trade off of, because I know this level doesn't have a lot of potential. So I would ignore this one. Then I would look at this one down here. And let's look to the left to see if price have more rejections in this area. Actually, we could do wick to body. So this is the wick on the 1 hour time frame. Capture the lowest point of the wick to the top of the body and extend it left. Let's see if we have any more rejections in this area. Guess what we have? Well, this was a bearish fake out, but overall rejection. Because look at this big ass wick here, rejection. Look at here, rejection. Fake out, rejection. Because this area getting faked out, that means this area is a little bit inaccurate, because there's another area right below it. So now I'm looking at this level here. Now look at it. Rejection, 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 rejection. I did the same thing. Wick to body. A little bit bigger. Now we got all these rejections. Now what would I do? Let's extend this to the right. And now we can focus on this actual level, right? And now we don't need this one anymore. so on and so forth, right? But you want to look to find areas. You deserve a lot more viewers than you have. Bro, I say the same shit. But now that you look at it like from this aspect, this is how I actually draw support resistance. Now it don't look how it did before. You don't see a bunch of just boxes all over the place like this, and then like this, then like this. I just narrowed the levels down based off of previous structure. So now, because we have too many invalidations here, now I'm focusing on pure price action that's happening inside here. Pure price action focusing inside here. I want to look at the structure first. Before I put my levels, I want to look at the structure. So looking at the structure, where's my circle tool? Looking at the structure, we have a high, a higher low, a higher high. Let's put it in bar replay mode. If this is the structure I see, same thing. Take a line, put a line here. Was this area previously rejected? So we have resistance here. Was it previously rejected here? Yes, it was. Use the highest wick to the lowest body, drag it all the way across. This is the whole rejection area. Same. Well, I don't have to do it here because I have one here, right? So why would I want to trade off of this one if it's one sitting right above it? I don't want to buy it right above it just to get rejected here to lose the trade. That makes no sense. So in reality, just ignore this one. Then look at this one right over here at this low for support. Now we have my resistance. I need to find a support. Look at the support level here. Boom. Let's put it there. Look to the left, see if this area got rejected previously to the left hand side. So see, we got a fake out here, but guess what? Rejection, rejection, rejection. So we had one fake out, 1, 2, 3, 4 rejections. 4 rejections and one fake out. This seemed like a very strong level to me because we have more rejections than fake outs. Simply use the whole level from lowest wick to highest body and trade off of this support. Now what do we see? We have a whole range. Now you see the whole entire range. So that this overall is a range. We're creating just consolidation inside this area. Now this is how I decide which areas to actually take or which areas I look for break and retest at. This will be a high break and retest area because I know this area struggled to break through in the past. So if we could break through it and have a retest that actually holds, then let's let me know that this area is actually holding. Now I can look to target my next support or resistance. So where will my next support and resistance be? At another low. So same exact thing. Take my circle tool. Now let's look at this low here. Take a line. Put the line tool at the lowest point of the wick. Look to the left with this lowest wick previously rejected. We have rejection here. We have some fake outs here. Some rejections here. If you like the level, use it. If you don't like the level, adjust it. See, I don't like this wick. Not gonna lie, because we have too many different quarters above it here. So instead of using this wick, I'm gonna look at this one. So just simply adjust it to this lowest wick. Okay, now what we see? Look at this wick here. Do we have any closures below this wick? Nope. Wick, 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 wick. All rejections. What I'd say, closures are confirmations, wicks are rejections. So if all of these are rejections, do I like this level? Yes. Simply start off at the lowest low to the highest body, drag it to the right. Guess what we see here? This previous one that I looked at just rejected this one. Literally happening right in front of you. Right? And then I could extend the left if I want to look more left. All of these are just simple rejections. This was a market open or some kind of fucking news or some shit. Well, yeah, this was Asian session. This was a daily candlestick open. That's why it's a gap right here. But overall, this level was potentially rejected. So if I do take a sell off of this area, where's my next area for potential rejections or my next potential target? This area, because I know the last time price was in this area, we had a big rejection off of a big rejection. So I know if price gets to this area again, we might have some form of rejection because it already happened here. And this is where I would look to close trades and then, like I said, support and resistance is areas of potential rejections. If we look to the left of current price, if current price is here and we look to the left, which would be these candlesticks here, do you see any rejections in this bullish move? Nope. You see green candle, green candle, green candle, green candle, all just straight aggression. This aggression is not going to continue forever. price actually is going to come down to balance out this overall bullish move at some point in time. Now is the point in time, just because the fact that the market is overall bearish. If I zoom out, we're overall selling. So now that this break and retest selling off of this area makes more sense, because we have to correct this bullish move in the overall bearish market. So that makes this trade even more a higher probability setup, because price has to balance out this bullish move. Now you can have an easy trade to a 1 to 2 or 1 to 2.9, almost 1 to 3 trade, just simply trading this break and retest. Hopefully this past broadcast saves, so y'all can rewatch it if you need to. But this is literally how I just draw my zones. I use the lowest wick to the highest body, or the highest wick to the lowest body when it comes to resistance, lowest wick to the highest body when it comes to support. Look to the left to see if that area was previously rejected. If it was, that's the area I'm looking to execute off of. Now, when I first marked up my levels, when I said everything that's inside this area is technically support and resistance, like I had this rejection here, I had this rejection here, I had this rejection here. Like, I just cut out all the noise and just kept it simple. These are my major. These are all minor levels, technically minor levels, but these are all my major levels. These are the levels that have big reactions off of. So if I want a big reaction, I need to trade off of a big reaction, or a big reaction market, or a big reaction level. Hopefully I explain everything clearly. Let's get out of bar replay mode, because where's actually price at? Like, I don't even know if I got executed or not. Oh, we actually almost got executed. Wow. Almost got triggered. Wait, did I get triggered? Let's see if I got wicked in. I did get wicked in, bro. Fuck. So I'm actually in this trade. Where's my entry? Entry 25421. 254. So if price got me in a little bit higher than what I wanted to get in. So I actually did get wicked in here. Then my stop loss is 25670. 25670. So I did get executed on a trade. I low-key don't like the fact I got executed on a trade, because we didn't break the low. Literally, we wicked and came close to it, but we didn't go lower than this low. If I take a line and put it here, this wick didn't go below there. I don't even know why I got executed on this. This broker is fucking ass. Because why did they just fucking execute me here? This is a learning experience when it comes to getting executed like this. This is the first time this happened to me. Next time, I'm going to put my sell stop a little bit lower than the low to make sure I don't get executed too early. But then that's actually taken away from my risk reward. But I definitely got. Let's see if I got executed on the other broker. Yeah, my other broker didn't trigger me in, bro. Just one fucking broker triggered me in here. It's good. I ain't tripping though. We just need to respect this high here. If we respect this high, then we should continue down. If we don't respect this high, then I'll just take this losing trade on the chin. I should not have got executed here. But bro, I'm trading prop firm, so it's the broker associated with the prop firm. But I low-key should not have got executed here. I'm trading Clarity Traders prop firm and Top One Trader prop firm. I have a live account with, a live funded account with both of those. My Clarity Traders firm, I use on my phone. My Top One Trader, I use on my PC. So if I'm looking at a trade on my phone, if I'm looking at trading, if I say I'm looking at trading, I pick up my phone, it's because that's my Clarity one. I have an Alpha Trader spot. I was lucky gonna get one of those, but I don't know. I lucky don't even know. I just started using Top One Trader this month. I haven't got a payout from Top One Trader yet. I'm on my Top One Trader account. I'm up about 4%. Let's see. So I'm up 5% on my Top One Trader account. And I could request a payout, but I haven't requested a payout yet. I'm not gonna request the payout until I get to 10% profit on a month. So right now I'm at 5%. I'm in no rush to get a payout, to be honest. But I want to hit my goal for my payout. This is me personally, though. Let's see how gold's doing. So gold's definitely just rallying up. So no trade here. We could delete this alert. That's a good thought. Focus on the percentage than the money. Yeah, I just focus on percentage, bro. Money gonna come regardless. I don't look at P&L. I don't look at dollar amounts either. Like if you ever see me post like a profits, post my like how much I made on the day or something like that on Instagram, or like in the Discord, something like that. That's just for like motivation purpose. I personally don't care about profits. I don't care about how much the profit is. I care about percentage growth. Because if you focus on the money, you're gonna get tied to the money. If you focus on the percentage, you're gonna unconsciously, well, subconsciously develop what's it called? Something. I'm just having a fucking brain fart right now. In a nutshell, if you just focus on the percentage, you're not gonna you avoid FOMO by focusing on percentage gain and not profit gain. When you look at the dollar amount, you think yourself, oh, I could have made $500 here, or I could have made $1,000 here, or I could have made $50 here, right? Because you're looking at the money. Looking at the percentage, I don't think about none of that shit because I'm just focused on percentage gain. And looking at the percentage versus the overall profit, you get to you don't have to change the system to trade bigger accounts. So I can go from trading a 5K account to trading a 300K account, and nothing changes in my system because I'm just risking percentage. Now, risking 1% on a 5K account, $50, and risking 1% on a 300K account, which is $3,000. Now, people that focus on percentage, that might take a mental toll on them, on their psychology, because they're not used to seeing starting to trade off $400 in drawdown, starting to trade $500 in drawdown just because of the spread or something like that, right? Or the commission being $50, $60 of commission, for the simple fact that on a 5K account, they're not paying that much in commission. They're paying $1, $2 in commission, or $1, $2 in fees or whatever the case may be. But seeing that immediately being in drawdown on a 300K account, as soon as you place a trade, that might trigger their psychology because they're like, oh, I'm down $300 and I just enter, or I'm down $500 and I just enter, right? That don't bug me. For the simple fact that I don't care, I don't look at the P&L anyway. I'm just looking at percentage. 1% is 1%, no matter what size of the account it is. I don't have to critique my strategy or critique anything in my trading plan. Just because 1% is 1%, no matter where it's at. If it's 1% on 5K, or 1% on 100K, if it's 1% on a $1 million account, it's still just 1%. So I don't get excited for 1% because I made 1% hundreds of times on smaller accounts. Now, making tens of thousands of dollars all the time. Now that would entice people to be excited because of the being at thousands of dollars, right? But me, if I'm trading a $1 million account and I make 10K on no trade, that's only 1%. So it's cool. How do I calculate percentage into lot size? Well, I use Trade Locker, so it's already embedded in Trade Locker. So when you use Trade Locker, they have, when you press the arrow tool on the bottom right hand side, the tool will pop up and you press percentage risk, press 1%, and you put the stop loss, and it automatically calculate the risk for you or the lot size for you. If you don't use Trade Locker, you could just Google, if you trade Forex, that is, I don't know about futures, but if you just trade Forex, you could use what they call a pip calculator. Go to this website right here, forextime.com. Click on the first link and scroll down to where you have pip calculator, and you just put whatever currency you're using. If you're using euro or the Great Britain pound or USD, just keep that there. What pair you're trading? Say I'm trading gold. I'll just scroll all the way down to XAUSD. That'll be gold. And what lot size I'm using on that pair? say I'm using a 0.50, and then put my stop loss. Say I've got a 70 or 30 pip stop loss. I'll put 0.15, not 50. 0.50 or 30 pip stop loss. This, well, that's not 30. This is 30 because gold is one decimal place short. So this would be 30 pip loss. It'd be $150. Now, if $150 is not 1%, you gotta know what your 1% is first, right? So do your account balance times 0.01. That's going to give you a percent. That's going to give you a dollar amount. That's going to be your 1% of the overall account. Then if it's, say my 1% is $50 and this is too high, see, as you see, this is clearly over $50. I would just drop this down. I will keep dropping my lot size down until I get this number to 50. So I'm going to cut it in half, which should be labeled to 75. So 75 is still over 50. I'm going to cut it down to 20. 20 is still over 50. I'm going to cut it down to 15. 15 is 45. I can go up one, 16, 48. Go up one more, 1957. So now I can go 48 or 57. I mean 54. 54 or actually 17 good, 51. So 48 or 51, and I'll pick one of these, 0.17 or 0.16, and that would give me my 1% risk for this stop loss on this pair. That's how I calculate risk. If I'm not using Trade Locker. If I'm using Trade Locker, I would just use this. Let's look at on 5-minute time frame. So as you can see, we had a breaker structure, creating higher highs and higher lows on a 5-minute time frame. First, we made lower lows and lower highs here. This push up, created a lower high. This push down, make a new low, breaker structure. Then we have a higher high. The 5-minute is not the best because we still don't have no higher low on a 5-minute time frame. So price can easily just push up and confirm this to be a higher low, right? But if we look on a 1-minute time frame, let's look at the 1-minute structure now. Look at the 1-minute structure. We had a market structure shift here. Look at the 1 minute. We have higher high, higher low, higher high, higher low, higher high, higher low. Now we actually see the structure that's forming on this 1-minute time frame. This push down overall gave me this bearish market structure shift here, breaking below this low. Now you can look at the bearish structure. We have lower low, lower high, lower low, lower high, lower low, lower high. Well, this was a bullish. This is where we went bullish at. Oh, not that. This is where we went bullish on the 1-minute time frame. But this bullish push was just a fake out. The reason why I know it's a fake out is for the simple fact that we eventually came back down and re-break this low, which actually executed me in a trade. So technically, we still should be bearish on a 1-minute time frame as long as we stay above this high. This will be considered a very aggressive stop loss. I don't want price to just take me out to continue down. So I'd rather have my stop loss above the overall high and not just this 1-minute low. But so far, so good. If we could push down and put me in profit or getting back to my quote unquote what was supposed to be my original entry, then this trade is even more valid with this 1 minute showing me bearish lower lows and lower highs here. With this lower low, lower high, and we have a new low breaking below this low here. I think my trading strategy is so simple, bro. I just literally look at the lower lows and lower highs and just execute off of them in the bearish market. Looking at the 1 hour time frame, we had a 1 hour. So remember KB, how you said the 15-minute close above, and I said this 15-minute could be a fake out. This 15-minute bullish close could be a fake out if price pushes down to take out this low. Now, if you look at it on a higher time frame, this was a 1 hour candle as well that closed above. The next 1 hour candle did close back within inside the range, and if you look on a 4 hour time frame, it should be a 4 hour wick rejection. This is why it's important to use multiple time frame confluence. Because literally, this bullish fake out was just a wick rejection on a 4 hour time frame to flip back bearish. And now we can look to target these wicks for like wick fills or to fill the rest of the range, which is clean. But this is how you avoid fake outs. Breakout traders buying above this quote unquote resistance, right? Buying above the resistance, it's all in drawdown here or potentially taking a loss here just for the simple fact that this is the overall bearish structure. And now this push up was also tapping into this minor level of support or resistance in this case. It was support here. You draw it from wick to body. See if this area was continually rejected. And now we can see we have another rejection here. But there's no point in using this level if I'm using this one. So I don't need both of them on the chart. Just delete one and focus on the one that's the lower one, because it's a bearish example. Same as GJ done the same, so I didn't enter the sales. Let's look at GJ. Yeah, nice. Oh yeah, so close below here, and then close back above with a bullish engulfing. Yeah, so this was another bearish fake out, getting sellers in and stopping them out. This will be what people like SMC traders like to call your stop loss is my entry. This will be the seller stop loss above here, and the price starting to push it back up. Now you got the SMC traders trying to buy this back up. That's just my outlook on it though. GU is playing. I just needed to come down and take out this low. This is my TP1. I'm gonna put it on the charts. Set up right here. TP1. I low-key think we can make a new low below this low, to be honest. Cause I really think we can come and tap into this level down here. This is a low down here that was never retested. As you can see, we had a low, all in the same area. But this low wasn't never retested, so I think we can come target this low. To be honest, that should be my overall target though. But before that happens, price has to come down, put me in profit. I think I'm gonna wrap it up in the next 15 minutes. I think I'm gonna stay here for this 30-minute close, and after that, is your Insta on Discord? No, I could put it. I gotta tomorrow's stream when I go live tomorrow. Remind me to put it in the description. That's not my Instagram. What am I doing? There we go. Yeah, market it's gonna close at 5, I think. Oh, tomorrow, not today. Not today. Tomorrow. So tomorrow, I don't know. But today, I think it should be closing early. Not gonna close, but it's gonna freeze price like it did on Christmas. I gotta pick up my chain tomorrow. I'm hype as fuck, bro. Waited so long for this bitch. Hey, bro. No, nobody see my chain yet, but I'm finna tell y'all what it is right now. I got the actual necklace part is a rope, gold, solid gold rope chain. The pendant on the pendant that's gonna be on the necklace is a VS1 bust down diamond 3-letter pendant that says XAU because I'm the king of gold. So I got that shit custom made to say XAU. I think that shit's so comp. People gonna see me in real life and be like, bro, what the fuck is XAU? And I'm just gonna be like, if you know, you know, man. If you know, you know, my man. If you know, you know. I decided to reward myself for all the hard work I put in this year, bro. And bought a chain. Only real people know, hell yeah. People gonna be like, bro, what's XAU? Why you got XAU on your chain? Like, that's random as fuck. Like, hey, man, if you know, you know, man. I was gonna get the whole XAU USD, but I'm like, nah, that's gonna be too long. Too long of a fucking, too many letters on the pendant. So I just got the 3-letter XAU. I'm excited for that shit. I ain't see it yet, so I get to see it tomorrow. Come on, gold, stop. I go. I keep saying gold. Come on, G, you stop playing, bitch. Like, come the fuck on, nigga. You know you want to come down for me. Got 30 minutes. Yeah, 10 minutes left in 30-minute candle, bro. Just go ahead and close down here. We good. Like, technically speaking, all of this right here, from this low to this body, this is technically a support level. But if we drag it left, how strong is this support level? We got rejections here. This is actually a pretty strong support. Oh, that's why we're struggling in this area. Gold, yeah. Gold all the way. Hell yeah, that's comp. I like that, bro. That's gonna be my theme song. Gold all in my hell yeah, that's your. But that's probably struggling at this level, bro. I ain't even noticed that till now. We're struggling at this area. If I drag it to the left, we have rejections here, rejections here. This is why we're struggling here. So the breaking, I'm actually early. The breaking retest I should have been looking at is trading the breaking retest down here. I'm already in though, so I ain't really tripping. As long as we stay below this overall high up here, I think we're good to come down, bro. Don't believe me, just watch. I secured about 2% yesterday on the gold sales. I held for 1-2. So if I lose this trade versus 1%, I ain't even tripping, bro. Knowing I shouldn't even got executed on this trade. I literally should not got executed, bro. My sell stop did not get activated. The spread put me in early. So I wouldn't even be mad if I lose this trade. I wouldn't consider this. I wouldn't consider this loss. a part of losing my strategy. Because my strategy was to sell below the low once the low get taken out. The low never got taken out, but spread fucking got me in. So if the low still doesn't get taken out and it reverses here and I technically lose this trade on the chart, but it never takes out that low, I would really think of it in my head like, bruh, I didn't take that loss, bruh, because my strategy didn't lose because it never took out the low how I anticipated it to do. But it's a lesson. Lesson, next time, put my sell stop below the low and not at the low. That way I don't get put like 3 or 4 pips below the low. That way it could be a clear break and then execute me in. So there's a spread, put me in, bro. Yeah, that was stupid. I'm looking like, bro, did I get executed in? Then I go look at my fucking trade locker. That shit actually triggered me in, bro. I'm like, bro, hold the fuck up. That shit didn't even hit. What the fuck? I literally copy and pasted the numbers from here to my other monitor on trade locker. Then when I look at the entry, it said the entry was at this point a couple pips higher. Like, bitch, why you feel me at the price that I put on there? Don't just decide to spread me in early, bitch. The fuck? Think about day trading in the think about day trading back in the day when, like, in the stock market and stuff like that, when that shit first came around, whatever. And people was calling the fucking the center, whatever, where they got all of the traders on the floor and shit like that to actually get their positions filled. Think about how many people was getting slipped and shit, bro. That shit probably was crazy. Trying to get filled at a certain price, you phone ringing because everybody trying to fill their prices, fill their orders and shit. I'm gonna start tuning into your lives and learn. I got you, bro. Hey, where you from? Are you from the NLT server? I'm trying to go live more often. I used to go live every day, but I stopped going live every day just because I don't trade every day. The reason why I don't trade every day is because I focus on the higher time frame priority. So the daily 4 hour and 1 hour. So sometimes I might be waiting for a 4 hour structure shift, or I might be waiting for a daily structure shift to actually get me in a trade, or actually look to take a trade. So sometimes I just be waiting for that to happen, which on a 4 hour time frame is a higher time frame. So I'll be waiting. I'll probably go like a day without a trade. Sometimes I'll never go 2 days without a trade. Sometimes I go a day without a trade. So I stopped going live because I wasn't. Then I was holding my trades for longer. Like on my credit traders account, my average trade duration was is currently 4 hours with almost 81%, and 4 hours hold trade duration. So I'm not sitting on a chart for 4 hours while I'm in a fucking trade, bro. That's crazy. I'm more so not necessarily a scalper, even though I use the 5 minute time frame. I don't use the 5 minute for scalping. I use the 5 minute time frame for entries, and I use the higher time frame for targets. That's why I'm in my trades longer. But I'm more so in the intraday / day trading space, not necessarily the scalping space. So because I hold longer trades, no point in me sitting here for fucking 4 hours while I'm in a position, bro. So I just stopped going live, to be honest. But I'm gonna try to go back live just to start providing more value. How you find me on YouTube though? Did you find me from the NLT server? I'm from Cali and yeah, NLT, but couldn't really understand the strats and don't really want to scout. Just want to see the trades like you. Okay, I got you. That's where I found you. And yeah, KB, I got you. I'll be seeing you talking in chat. But I knew Luca since the beginning of my trading journey, to be honest. I think I met Luca in like 2021. Yeah, 2021. I'm gonna stay on here for 4 more minutes to 30-minute candle close, then I'm off. The 3 people I watch are you, Luke, and Dr. Dollar. Yeah, I used to be a member of Dr. Dollar VIP, and but you don't. How long ago did you watch Dr. Dollar? Cause how you don't remember me, bro? Now I'm low-key insulted that you used to watch Dr. Dollar and don't remember me. I like Alex FX. A strat is kind of similar to yours, but yours seem more structured. Yeah, I like Alex. I like Alex as well. Alex is like the main trader that I like watch. About 2 months. Was you in Doc? Oh, about 2 months now. Okay, I got you now. Like a long time ago, bro. And Dr. Dollar Zoom. I was in a Zoom and I fell asleep in that shit. Like in 2021, I fell asleep in the Zoom, bro. I'm asleep on the stream in my chair with my face cam on, like this, mouth open and all. But I woke up, I look in the fucking Telegram, I just see my picture everywhere. People niggas screenshotting that shit. I said, yo, those niggas out of pocket. I was in this chair, knocked out, man. It was like 4 o'clock in the morning. I was knocked the fuck out. I started seeing that picture everywhere for like a week, bro. I said, nah, I became a fucking trading meme for a couple days. Nah, that's fucking bad. They was cooking my shit. But nah, I like Alex video overall. I mean, I like the way Alex trade. I think I trade very similar, but for his entry, he likes to see bearish engulfings in session. He likes to wait for bearish engulfings. I watched that whole $100 to $1 million challenge thing, and damn near every video entry he took was bearish engulfing at this level, bearish engulfing at this level, bearish engulfing at this level. Like he was spamming the fuck out of bearish engulfing at this levels. So I kind of got my levels like similar to his, and my buy is similar to his when it comes to break and retest. But instead of just waiting for a bearish engulfing candle, I just wait for a market structure shift. If I waiting for a bearish engulfing candle below this level when it's breaking retest, I would have sold here. Because this technically is a bearish engulfing. Then I would have been in this much drawdown. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. $13 in drawdown. Taking this. Like, no. Fuck no. Well, technically I wouldn't even be in this because it's not within session. But let's look at the go trade I took yesterday. Did we get a bearish engulfing? Okay, yeah, we did. What the fuck? This bearish engulfing at this level, I would have to get in all the way down here? Yeah, hell no. Let's see, we got a bearish engulfing in the lower time frame. You look at this shit, bro. Bearish engulfing. This shit went right to TP, bro. Look at it, 15 minutes. Bearish engulfing. I would have to get it all the way down here. This trade still would have won, but it would have killed my risk reward. Alright, got a 30-minute close. Got a 30-minute close. Weak doji. What a fucking bitch close. I'm gonna head off here, bro. It's either stop loss or TP here. If you didn't get executed on the trade like how I did, bro, just wait for a market structure shift from the 5-minute, or not the 5-minute, the 15-minute time frame. Look on the 15-minute time frame. We have clear, higher high, higher low, higher high. Wait for price to take out this low. If price could take out this low, you could execute on the sales here. Stop loss above the high. Either that's the option, or you can wait till we overall break out of this structured level. Because if we look left to this level was definitely struggled to break through in this area. Support here, strong resistance here. So either you can sell here after this actually gets taken out, or wait for this break and retest to then sell. And wait for the same higher highs and higher lows to form on the retest before actually executing. That's what I think. I was getting lit, and that's what really inspired me to start, especially when I can't work for the next 3 to 5 years because I got hit by a drunk driver, so I couldn't let that affect me. Damn, not tapped in yet. I'm leaving it in place until we break the high. Okay, I got you. Trying to get the money for me, my kids, and my wife. No, I feel you on that, bro. Feel me? I ain't got no kids and no wife, but I feel like I worked the job a lot right? And I think about it like this, bro. For anybody that's working 9 to 5 jobs, or even worked a 9 to 5 job at some point in time, think about it like this: the 9 to 5 job you was probably working was not your dream job, not your dream career, not your dream field, whatever the case may be, right? That was somebody else's dream. You building somebody else's business, and if you doing that 8 hours a day or 12 hours a day, like on like an 8 hour shift or 12 hour shift, bro, that's crazy. How can you go 8 hours a day building somebody else's dreams, and then for the remainder 16 hours that you have of your spare time, you don't even chase your own? Everybody should have dreams and aspirations and places that they want to be in life, right? But to help somebody else build theirs by clocking in work every day, then going home and saying, I'm gonna play the game, or I'm gonna do this, or I'm gonna go out and party, or I'm gonna go out and drink, shit like that, for me. But not taking no time to actually focus on your own craft and be going to get into where you want to go in life when it comes to your dreams and aspirations, then you just what is the point of you being here for? That's just how I think about it. Like, I refuse to go to work 8 hours a day to work for somebody else, just to go home, build somebody else's dream, just to go home and neglect my own dreams and aspirations. My dreams and aspirations is I want to just make a fuck ton of money, right? That's my dreams and aspirations, right? Real, very, very fucking simple. I want to make a fuck ton of money, retire my parent, my mom, whatever, and just live the best life I could possibly live with the fuck ton of money that I just made. So in order to do that, I gotta chase my own dream. I gotta chase the fuck ton of money I'm trying to make. You know what I'm saying? It's that simple. Since I had the time now, I am not going to waste it before it's gone. No, that's facts, bro. But yeah, that could be a double-edged sword. Cause too much time could cook you. You could get too much time on the charts, analysis paralysis, or definitely FOMO. Looking at shit happen all over the place just make you just want to trade. So getting time away from charts also good as well. Not necessarily getting away from time from trading. Like, you can still do like YouTube videos or watch content, whatever, to more so on the learning aspect of trading. But when it actually comes to actually putting on chart time and charting up periods and drawing your levels and all that other shit over and over and over and over again, bro, you're gonna want to take some trade. You're gonna want to trade something, bro. But now I'm gonna wrap it up here, man. Appreciate y'all for stopping by. It's your boy Traderholic, and I'm out, man. I'm gonna do a breakdown on YouTube Shorts and Instagram Reels of this gold trade that I caught yesterday for 1 to 2.8, almost 1 to 3, and I'm gonna post that tomorrow. But stay tuned for that. It's gonna be on Instagram and the YouTube Shorts. It's your boy Traderholic, man, and I'm out. Chat. Appreciate y'all for stopping by. Catch y'all tomorrow. Peace.